Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, great to see you.
Thanks for having me.
So we have what's going on in the market. We got some interesting stuff. Today's Wednesday, July 12th. We had the CPI numbers. What happened? What do they look like?
Yeah, so we had a pretty soft inflation print. It was lower than expected. Core month-on-month printed a 0.2 versus expectations of a 0.3, and the unrounded was low as well. The key components that were dragging on these inflation figures relative to expectations, at least, were things like airline prices and used autos.
So airline prices are down? That's what I think it's it looked like a lot, like double-digit percent. I don't know if I'm seeing that.
Yeah, so they're
like on the ground.
There's a healthy amount of disillusionment over a lot of the government data that's published.
Fair.
You know, take for example, like the owner's equivalent rent stuff and just the housing figures in the CPI data, right? Folks are like, yeah, we were already expecting that to come down because we know it's a lagging indicator, and so, you know, how much weight do you put on it knowing that it's lagged and people were already expecting it to come down?
Right.
But I think the most important takeaways that, you know, from this report is that, you know, inflation is headed in the right direction, and that you are seeing drops in prices in areas of the economy that are sensitive to interest rates. But outside of that, it's a little bit trickier. In addition, I think a couple of things that are notable are, you know, you're going to start to lose some of the base effects that you had earlier this year. You're not going to be losing like really high prints from a year ago as you add like numbers going forward. I think that's very notable. I also do think that housing is actually starting to rebound a bit, and that you might eventually start seeing, you know, rents ticking up a bit. And high level, like rents are still going up like 6, 7, 8% a year.
Right.
That's a lot. That is not sustainable.
That's crazy.
And the Fed is actively trying to tackle that, and that has not gone away. And, you know, just if you think about, you know, parts of the economy, like the service sector of the economy is still really hot. So all in all, like this is a soft inflation number, but one, I don't think it's going to deter the Fed from hiking in July. Two, you know, there are aspects of the economy that are starting to show signs of reinflating. And that is going to be a constant fear for, you know, the Fed and market participants.
Yep.
Anyway, you know, besides this sort of one soft reading, you know, I think the price action afterwards was pretty notable. You had a pretty dramatic rally in fixed income. You know, the belly of the U.S. curve rallied, you know, 15, 16, 17 basis points. That's pretty dramatic. And the dollar index is off over 1% today.
Yeah, so it's down. The dollar was coming down.
Pretty hard. One, that's a function of renewed speculation that the BOJ is going to increase the band that they allow the 10-year to trade in by another 50 basis points. So, you know, BOJ getting hawkish fears. And then two, it's like the U.S. rates went down a lot. And this could be the end of the Fed hiking cycle. And some folks are saying, you know, the hike in July could be the last one because we have disinflation. And it's not a bad thing to have, you know, inflation coming down and people still having jobs. Like that's an okay scenario.
The labor market looks great right now.
If the labor market looks great and prices come down, then it's
pretty much nailed
awesome.
It. Yeah.
However, that's just not likely.
I know. I hear you. So
it's just like people get ahead of themselves.
I just like this. You've used the word inflation, and then you correctly and interestingly, I want to point out, use the word disinflation to describe the growth in inflation coming down, right?
Yes,
so
the deceleration of price increases.
Disinflation. It's not negative inflation. It's still the presence of inflation. This is the thing that I just like. I know people know this, but like some people don't really get this when we say like inflation's coming down.
It's about the rate of price change.
Price increase is still increasing.
Yes,
it's increasing more slowly on a compounded, annualized basis. We need to actually get to like 2 or 3%.
Yeah.
Don't we need to have like negative months? Months where inflation is negative?
In theory, to get to the 2.
That's what I'm saying.
To get to the 2, yes.
Like, so I guess it's good that we're like 0.2 and not 0.3. We're getting pretty close to 0, I guess, on a month over month.
Yeah.
Right.
But it depends on how you slice it and dice it too. Like, okay, like electronic prices are down a lot this year.
Right.
I mean, I was on Best Buy. I think I saw a 42-inch TV that was $150.
Yeah.
Yeah.
Like I got really upset.
That stuff is down.
The 55-inch Samsung I bought like 5 years ago, which is still a good TV. It's half the price. that it was then. Half.
Right? But it's like people already have TVs. Do they need them?
No, I know. And they also last a long time, too.
Yeah. The other thing to think about is like you do have student loan payments starting up again, at least the federal student loan payments. And that's a pretty sizable.
Is that September? Or October
I think it's either August or September or October. It's within. I actually think it's September.
Yeah.
But I think the average U.S. person has about $550 worth of monthly payments to make.
So that's income that is currently discretionary going to become.
Yeah, it will go straight from like income to the loans, or will come from excess savings.
Right.
And that should be a drag.
Yeah.
But again, like if you look at, what's been happening, like corporates like raise prices as long as people keep paying it. People keep paying it because they still have jobs, and people still spend because they have credit cards and they have room to run, and they don't want to change their lifestyles and stuff. And so, there is a cycle where this stuff continues and persists. And, a warning sign was last week when you had ADP report 400,000+ job gains, although the actual, BLS report on Friday reported less. They did show a pretty material increase in average hourly earnings, and you're still running like 4% plus in average hourly earnings, like inflation, right? And so, like the labor market's hot. People have pricing power in the labor market. And so it's really tough to see a scenario where this stuff really cools off.
Yeah.
Hence why, like, I think today's probably an overreaction, if anything. I mean, stocks going up to the dead highs of the year.
Is that where we went this morning?
We went up to 45.20 in S&P.
Wow.
Yeah, and NASDAQ also hit
So you're saying it's
highs.
The market, in your opinion, was taking an overly bullish view, because it's like, yeah, okay, it came in under expectation, but it's still sticky.
I think the most important thing is that, the threat of reinflation is very real, and the Fed is hyper aware of that risk, and they are going to stay higher for longer.
Yeah.
Because, that's what the economy necessitates. And you just look around the world, like Bank of England, they thought they had it in, and then it's like, oh no, inflation's back, right? Like RBA and BOC, they had stopped, and then they kept going.
I know, we really need to you got to quietly stuff this monster back under the bed, right? You don't want them reappearing. All right, we're all calm.
Yeah.
That's got to be a really traumatic. Okay, real quick too. I mean, Bitcoin looks like it's been mostly pinned. You see the clock behind me around like the mid 30,000s. We've been chopping around for almost, I think maybe 3 weeks at this point, basically between 30 and 31.
Yeah.
With a couple little dips and pops. But what do you think? I mean, what's your view on just directionally on Bitcoin at this exact moment? Given we've got GOX repayments in the fall. There was some Silk Road Bitcoins were moving, I guess, to be TWAP sold by the DOJ probably.
Yeah.
Currently, I don't know what else. What's your
stance
on this?
My stance is, I do think that there's a healthy amount of long positioning that is in Bitcoin, and that's why the rallies have been less than spectacular over the past couple of weeks, because it trades like a crowded position.
Yeah.
Right? Like folks have this on, whether it's in spot option form, whether it's in crypto related equities, or, whatever it may be. Basically, since the Bitcoin ETF news came out, all crypto assets have done well.
Yeah.
And it's already up almost 90% on the year, right? So it's a really crowded trade that's done really well. That's at the dead highs. And you're, in terms of the next positive catalyst, when are we going to get more ETF news? Probably in weeks at least. And so there's an absence of catalysts. And then we got a negative catalyst today that we weren't expecting, which is the Silk Road government tokens, being
moving
sold. That's,
and we know, and this is they announced in March they had about 50,000 coins to sell, and they said they'd be doing it in tranches over the next year, which they've basically been doing 10,000 a quarter. Looks like.
So here's their next tranche here.
But that didn't really, it's
that hasn't yet. But it's a long day, and Bitcoin has moved down. Probably 400 points on this stuff.
You're right. Yeah.
So it's tough. It's tricky. I do think that the ultimate direction is higher. I've never been I'm very confident that this stuff is going to trend higher through year end.
Yeah.
But right here, right now, feels a little crowded. You're at resistance, and
Feels
it's
sticky.
at year-to-date highs. So I think what you're supposed to do is just make sure your positions are measured.
Yeah.
In addition, take advantages of dips in vol to maybe put on some upside structures. I also do think that the downside in Bitcoin is certainly limited now. With this looming ETF news, I think the bottom, like on crazy risk-off headlines, is like at least north of 25K.
Yeah.
For me now. And so, it definitely feels like a market that's trending. And long story short, trend's your friend. Buy on dips,
There you go.
sell on rallies.
There you go. Bimnet Abibi, our friend from Galaxy Digital Trading. Thank you so much.
Pleasure.